Good afternoon or good evening, everyone, wherever you are. This is Michael Burke. I'm Vice President of Client Training and Education here at TradeStation, and I want to welcome you to our Strategy Network Developer Showcase Series. Today we have a very special guest, Larry Williams. We'll be talking about his S&P Mini strategy. This series is designed to allow our third-party developers who develop indicators and strategies for use in TradeStation to showcase their products and their methodology, their philosophy on trading. And so Larry Williams is definitely one of those developers that we always look forward to hearing his perspective on the markets. This event will be archived on the Strategy Network site. And for those of you who have not been to that site, this is a link to the site. This is Larry's product page, and it'll allow you to go directly to Larry's page. He'll talk more about that himself as he goes through his presentation. So thank you, everyone, for joining us. Let me just get a little bit of disclosure information out of the way, and we will turn it over to Larry. Remember that the following presentation is for educational purposes only. All of the symbols and trading ideas discussed by the instructor are for demonstration and educational purposes only. TradeStation does not approve, sponsor, or endorse any third-party developers. We simply facilitate the introduction of third-party developers to our clients through the Strategy Network website. So let's take a look. I'm going to push into the chat the disclosure document. You can also find more disclosures and more information about TradeStation and Strategy Network on the TradeStation website. Lots of great events coming up at TradeStation. We have events going on almost every day. In fact, we do have events every day. Take a look at the calendar and definitely visit our website. There's every event that we do, we also archive. So if you missed an event or there's an event you can't attend, make sure that you go back and watch the archive of that event. Also, all of the commentary events that we do at TradeStation, the morning market briefing, futures market outlook, Forex in Focus, those are all archived on our blog. So if you haven't seen the TradeStation blog, definitely something you want to take a look at. So without further ado, this is Larry Williams. So Larry, it is all yours.
Well, thanks for having me here, and it's just overwhelming to be here and see people from Russia, Cardiff, California, the Czech Republic, India, friends of mine, people from all over. And it was not this way 50 years ago. There were just a handful of us doing this. So to see what this business of trading has become is just overwhelming. And what TradeStation has done, I also see my buddy John Bollinger is going to be doing a presentation on the 17th of September. You guys and gals don't want to miss that one. There's so much you can learn from John. I think you'll enjoy that. What my presentation is going to be about today is for people that really want to trade, as opposed to people that just want to try to learn and are dilettantes about this. I have developed some trading systems, mechanical, automatic trading systems that run in TradeStation. I'll be talking about the construction of these today, how I did it, and their performance, because they are available for people to trade in TradeStation. So with that, let's start looking at it. Here's why we like systems. We've met the enemy, and he is us. That's that old Pogo cartoon from, I don't know, 40 years ago, something like that. And I think that we trade systems because we fear ourselves. So we would rather put it off in a corner. So this thing is going to run and hopefully make money for us. There's a dream that will just automatically grind out money. That dream usually becomes a nightmare because that's not a whole lot of reality in that. But that's how we have systems. There's some other reasons other than we're afraid of our own selves, is we kind of know the expected results. You can develop a system and then say, well, my average profit per trade is X and the percentage is Y, and my maximum drawdown is C, and therefore we can develop some ratios of how we should manage our money on this system. The problem is these systems don't hold up very well for the most part. So you may still lose a lot of money. The future is never like the past. There's risk in anything that we do. And you know, that's about the only true thing the United States government's ever told me, is that there's risk in doing this. And past performance, real or hypothetical, there's absolutely no assurance of future performance in my book. I've seen people who've had really cold hands suddenly make lots of money, and people with very hot hands who've made a lot of money just suddenly fall apart. There was an advisory service many years ago. It was just hotter than a son of a gun. And they were the top advisory service for 3-4 years in a row. And then they just fell out of bed with the system. Who knows why these things stop working. So because of that, my fear is that we have to figure out systems that do hold up in the future. And I'll be sharing with you some of my ideas on that. Another reason for doing a system really is we're lazy. We don't want to have to pay attention to the markets every tick, every day, every trade. So we go, well, we'll just have this thing run and it'll make all the money for me. And so we're lazy. I think there's a little laziness in all of us. And so that's a reason. And that may be your reason. Well, if so, you don't want to put all the energy that it takes to be a full-time art of trading trader, well, then you're probably a system trader. A lot of us can't follow the market during the day. People have real jobs. And so that's another reason for having a mechanical system, or at night, especially now with these night hours. What are you going to do? Sleep at all? So there's a new reason for having systems. But the big reason, I think, is we arrive at money management values. We can have a rough idea, if the system does hold up, how we can maximize the performance of the system. Well, how good can systems be? Well, the truth is most systems lose. Most systems have large drawdowns. Most systems run hot and cold. With about 1,000 systems, there's a brokerage firm that offers systems that you can trade. There's a couple of brokerage firms that do this. I've looked at the results for over the last 15, 20 years. And of the thousands of systems that they've offered over the years, there are only about 40 systems that are trading now. And that doesn't mean this system has been trading for 20 years. It just means that's all that's trading now, because most of these systems have fallen apart and have not held up very well. So you have to really be careful of that. Well, how do you get around that? How do you protect yourself from that? Well, first of all, just the realization that systems don't hold up is a huge advantage to have, because most people believe that they will. So when bad times come, they don't know what to do with it. So I want to make you very aware that any system can run into drawdowns and have problems. So we need to watch how we construct our system, A. B, we need to have a default mechanism that says, uh-oh, it's not running. And C, we probably need to understand why the system should work and be willing to make slight alterations in it as we learn back from the system itself. There's the old turtle trading channel system, you buy, 20-day breakout, whatever. Well, there's probably better time periods that have evolved over the years, so why not evolve to those better time periods? I don't have a problem with that. So I think that we need to learn from this system and make alterations as we go along to keep the system running as well. Incidentally, if there are questions at any time as we come along here, feel free to pop in and ask them. Well, here's what to look out for in a system, my system or anybody else's. Small average profit per trade. That's the first thing. Let's say you have an E-mini system and the average profit per trade is $100. Well, by the time you get in, get out, have slippage, miss a trade or two that was a winning trade, you never miss a losing trade, it seems you really don't make any money. So your average profit per trade, that's the net profit divided by total trades, is a critical figure to tell you, do you have a realistic chance of making money here? The smaller it is, the less realistic the chance of making money is. I've seen systems that make a lot of money, but they made it from maybe 1 or 2 winning trades. So those winning trades, those big winning trades, probably won't happen in the future, or we won't be that lucky in the future. So the system really isn't successful. The average profit per trade might be large because we've had a couple big winning trades in the marketplace, but are you really going to get those big moves again? My luck is the draw has not been indicative that that's always going to happen. So I think that's another reason to watch out for a system that's making all of its money in 1 or 2 or 3 trades. You got to watch out for the potential for 1 or 2 large losses. I mean, losses is what we have to protect ourselves against in this business. It only takes 1 large loss to totally destroy you. So this is a real big trade-off. It's one of my weaknesses. My stops tend to be large. My profits tend to be small. But I don't know any other way of getting high accuracy, because we have to get accuracy as well. So it's a balance between these things, and I'll talk more about this. But let's say you have a system that's made $20,000, but had a loss of $14,000 someplace in there. Well, the largest loss versus the amount of money made isn't a very good risk-reward ratio. So you need to look at that. And curve fitting, if the person that developed the system is just running mathematical permutations, you can come up with most anything to make it look like a system works or a technique work, but it doesn't hold up in the future. I know. I've done that myself repeatedly. When we first started building systems, I probably have done more system work, I think, than most anybody, or at least initially did. I was kind of the guy that started all these systems years and years and years and years ago. And we curve fit things. Finally, we learned a little bit about curve fitting, matching data. We weren't aware of it at the time. It wasn't deliberate. But one of the things that I've learned is just say running, finding the best moving average or the best volatility breakout is no indication that that will work in the future. I had a trade for coffee. We had over 1,000, a system for coffee. We had over 1,000 trades in the system. I thought, hot diggity, this is great. The accuracy was high. All the numbers were really great. So I finally got a crackerjack of a system here. And it was straight down from the day that we developed the system, or said we're through developing it. So I think you have to be very careful with curve fitting. And the efficiency of a trade, I've talked about this before here at TradeStation. It's a really important number. You don't hear many people talk about it. So this is, I think, a great way to measure any system in the marketplace. So you can look at a bond system versus a gold system versus an Elliott wave system versus a Larry Williams system. Great way to compare. Here's how you do it. Let's say that you have two systems. They both made $56,000, and one makes $56,000 in 40 trades, and one makes $56,000 in another number of trades, comparable number. But so the numbers look the same. The accuracy is about the same. The risk-reward ratio are the same. But in one of those systems, your average length of hold is, say, 2 days. And in the other system, your average length of hold is 3 days, or let's say 15 days, make it even a larger example. Well, the system that's the most effective or efficient is the one that gets you in and out in 2 days. The system where you're in a position for 15 days means you're exposed for 15 days, 7 times longer than the efficient system. So I think a great way of measuring trade efficiency is the average length of the trade. How long are you in this? How long are you at risk? If we're starting professional football now, you don't get injured if you're on the bench. If you're out in the middle of the field, you can be injured. And it's kind of true of trading here. If you're on the bench, you can't make any money. You can't make a touchdown, but you can't get injured. So I want to look at a system that is efficient by not allowing us or doesn't take long to make our money and get out and be back on the sideline. So I think trade efficiency is really an important thing for us to consider. And that's how we do it. Well, how good can it be? You get one or the other, I've found in my experience of looking at systems and developing. You get high accuracy or large average profit per trade. The long-term trend following systems have low accuracy, maybe 35%, 40% accuracy. But when they do hit a big trade, oh my gosh, their average risk reward ratio might be 5-to-1. But they're wrong 65% of the time. A lot of people can't handle being wrong 65% of the time. So if we reverse that, we can develop systems that have high accuracy. Maybe they're accurate 90% of the time. But because you're not in the market a lot, you never capture a great big move, and you're going to capture some losses. So my experience is you either get high average profit per trade, high average profit per trade, or you get high accuracy. You get one or the other. It's extremely difficult to get both. I mean, that's the goal. But if you had a system that was, say, 80% accurate and a 5-to-1 risk-reward ratio, it's just a question of how many years before you're worth more money than Donald Trump or Warren Buffett. That's an incredible thing to develop. I haven't seen it, by the way. That's the goal. But you get either low percentage of accuracy and high average profit per trade, or low average profit per trade and high accuracy. The goal is to try to get those two closer together. But let me tell you, it is one tough son of a gun goal to come to. So can you really handle the truth? As I mentioned, there's one broker that specializes in these mechanical systems for over 10 years. They've traded over 1,000 of them, and only a handful of them still trade. So these things really don't hold up very well. There's John Hill's Futures Truth. You look at the future, the systems in there. It's a great area for people to look at, and you'll see some run hot and cold, some run real well for a couple of years, and they lose a lot of money. They come back on. What I wanted to break out of your mindset, boom, snap out of your mind that you can just follow a system, you're going to make money in perpetuity. That ain't the way it is. These systems run hot and cold. Why? Not because of the system, but because the markets aren't always the same. Some years they trend, some years they don't trend. If you're in a trend following system, you probably make money this coming year. If you're not in a trend following system in the market trend, you probably won't make money during the year. So, you plant beans, you don't get corn. You get a wild gyrating market, a short-term system will work well that year. But if you have a trend following system, it won't work well that year. So you kind of always have to remember, hey, there's no instant wealth mechanism here. This is still hard work and it's ups and downs. I'd like to talk a little bit about my systems, explain those to you. We have 4 systems, and I'm actually trading these with my own money in TradeStation. I think that separates me from virtually all of the other system vendors on TradeStation. I trade them real time, real money, every trade. So my systems are in gold, bonds, E-minis, and crude. We just started the crude trading system. Went long yesterday. We got out today, had a nice $850 profit in it. So it was nice to come out of the chute on the first one with a winning trade. The most unique thing about my systems, I think, is this, that I really do trade them. We've been trading them now in TradeStation, a couple of these for 3 or 4 months. And as long as they're there, I will trade them. So win, lose, or draw, good times or bad times for you. There are good times or bad times for me equally as well. I think that's only fair. I think my money should be where your money is. So here's the way it looks. Here's a chart of the E-mini system. Man, this thing's been on a roll, by the way. You see we had one losing trade up here. That's a red line. All the rest of them have been profitable trades. But if you look closely, you see we're in a trade anywhere from 1 to 3 days. Occasionally be in a trade 4 or 5 days, but not much more often than that. The idea is to get in, get a quick pop in the market, and get out. This is not a day trading system, okay? This is a system that tries to get in and get out. There's no day trading to this at all. It doesn't work on weekly charts. It doesn't work on intraday charts. It's designed on daily charts. My belief system is that it is extremely difficult to day trade. A, you have to be there. B, you can be exposed to large losses, false fat fingers, and all that stuff. It doesn't make day trading any easier than anything else. So I prefer end-of-day data, place my orders, place my stops, walk away. I can have a real job. Or I'm in Red Lodge, Montana. I've had some great fishing the last 3 or 4 days because the orders are there just automatically running. I let them run and I come back and see what happened. The truth is, I don't even look that often. I look at my systems about every maybe couple of weeks to see how they're doing. Most people look too often at the systems and they get to, oh, look how good it's doing. Oh, no, I'm losing money. They don't have a perspective. You have to have a perspective that these systems go up and down. I think that's very important to have that perspective. So that's what it looks like on a chart. Here are the numbers to give you an idea. I think it's a decent system. That's why I'm trading it. But the numbers could also be better. It made $115,000. This is, as I recall, from about 2002 forward. The average open position has been $512. Total profit $91,000. So you can get a figure of where the numbers are in this system. Been 403 trades, 368 trades have been successful. About 90% of them have been winners. So you have an idea of number of winning trades, 368, losing trades, 30 trades. The average net trade profit has been only $287, but that's the E-mini. That's not a bad figure for the E-mini. The largest trade was $5,000. So did all this $115,000 come from one trade? No, it didn't. The largest loss in the entire time period, the last 10 years, 13, 11 years, has been $4,000. There was one large loss. The average loss has been $2,000. You start to get some numbers and get a sense of there were at 1.54 winning trades in a row, 3 losers in a row at some point in the marketplace. And there's a chart of what it looks like. Notice it has good times and flat times and up times, and sometimes really strong and other times not as strong, which means you have to be prepared for that. That, as I said, there's no straight path to heaven. that you have to be prepared. The first year we dipped a little bit, we came back and we're at new equity highs now. You have to be prepared for that emotionally. Here is the largest profit was $5,000. Here's the numbers. I've blown them up for a little bit. The largest profit as a percent of gross is 2.87%. The largest consecutive profit or loss winning trades in a row is 24,000, as opposed to consecutive losers in a row, 5,000. That gives you another input. But I think what I like even better, this is what's happened since the first of the year. It's a little hard to read here, but that's 12/26/2012. Since that time period, there's been one losing trade. And we just got out of one the other day, another winning trade. So, yeah, we'll probably have a losing trade here at some point. Who knows when, though, because we saw there were 54 winning trades in a row as well. What I like about this system is that we have pretty good accuracy in it. So I'm rewarded. When I get tagged, I get tagged, but I'm able to feel pretty good about this system. But here's a problem that I personally had to have with systems, and that's this. We'll go on to the next system. I think I've got the gold system on here. I found, and if there's any questions you have about these systems, again, hop in, or you don't know what the charts mean, whatever, feel free to go in and we'll take a look at those things. Oh my gosh, now I've got all the questions. I see where the questions were. So bear with me a second here. These simulated trades? Well, we'll go back a little bit to, I started trading this system in the S&Ps about in March of this year. So these were simulated trades, and these have all been real-time trades, real money. Is that the loss per contract? I think I answered that. What is your mind like during that first year? How to get them? These systems are available on TradeStation, but let me talk a little bit about trading systems on TradeStation, because I do it. I can tell you the reality of this. There are some problems with TradeStation. Well, it's the problem with implementing automatic TradeStation. My stuff just automatically trades. Here's the way we do it. First of all, I have it on a cloud computer. That's really important. I can't touch the stupid systems because I created the systems. Now, you might not have this problem, but since I created them, I love to dabble with these things. I finally realized I couldn't do that. I had to take the system, put it someplace where I wouldn't at the last minute say, oh, well, maybe I should do this or that. So I don't do that anymore. And I used to do that a lot. I realized that I'm a dabbler, thanks to my son's book on psychology of trading, where we did so many interviews with traders to see the different styles. That's my problem. I'm too creative. I want to play with this at the last minute. So I have it on a cloud computer, and I would recommend that for anybody's trading system, mine or anybody else's. You have it not in your computer because it can go down. You can have lots of problems. Have it in a cloud computer where the chances of the computer going down, losing connection to a brokerage firm at TradeStation is infinitesimally small. It probably could happen, but it's just about, it never is going to happen. So that's the first thing. Then you have to watch out for another factor. We're going to run these systems on the current contract. We can back test on the continuous contract, but we're going to run them on the current contract. Right now, we're running it in the E-minis on the September contract. Well, you need to know when that contract is going to roll. We just had a long buy signal in the bond markets in one of the systems, and we have to make certain that we're taking that in to switch, because the September contract is going to roll to the DCER real soon. So you have to watch first notice day. You have to know when first notice day is. Let's say you don't have any signals for tomorrow, and you're still in the September contract, the expiring contract, and you get a signal, and now you're in the September contract, but first notice day is tomorrow, and now you don't have any time left, and TradeStation will kick you out of your position on first notice day. So you have to make certain that as a contract's going off the board that you are in the right contract. In other words, you have to pay attention. You have to really, really pay attention. A couple of questions have come in here. What are the efficiencies of these systems? Our average length of trade is about 2 days, probably somewhere in the numbers. We'll look at more numbers here in a little bit, but we don't stay in positions very long. I'm a nervous old man. The E-mini system is primarily on the long side. I think there's a few shorts in there, not many. Here's the big secret about trading, system trading at least. I have done so much work on systems, and you know what I found? It's always easier to make money on the long side than the short side, and I don't care what market it is. I don't care if it's gold or the E-minis, you seem to get a quicker bounce, or it's easier to find these bounces to the upside than it is to the downside. I do have some sell signals, but not nearly as many. Why? Because it's just easier that way. So I'm a very pragmatic guy. If it works, it works. And I found that that works, that is more consistent. It's not that there isn't money to be made on the short side. I love the short side, one of my bearish biases. But with the reality of trading, I've got real money on the line in these systems here. It's a lot easier to do it on the long side. Let's see, how do I use ES and Golden TradeStation? I'll talk a little bit more about that. Can you run TradeStation from the cloud? Yes, you can put it in the cloud and trade it from there. We do that. How do you decide stop loss? We have an automatic stop loss. You can change it in the TradeStation system, but we have a loss that I think is tested out the best. What is a cloud computer? Virgil, the cloud computer is where you put your computer on a great big computer that's continually running. It has people checking that it never goes down. It has redundancy to it, so your connections will always be there. What are you defining as accuracy in the system? The percentage of trades that are profitable. Are the systems common to commodity? Yes, there's a lot of commonality. In a moment, I'll talk more about it. Oh, well, Peter, my definition of efficiency, as I mentioned earlier, is average length of time in the trade. Out of sample would be somebody else's definition of efficiency. Do you have any systems for individual stocks? No, I don't, Edward. I haven't developed those. I'm basically a commodity trader. So here's the gold system again. Now you can see our average length of trade is probably a little bit longer, about 3 days in gold. It's not quick as Amazon Cloud Computing is not bad. We use it for a lot of data transfer. I don't know if it has enough storage though to run TradeStation on Amazon. Ron says we're in the 50-year bull market, so long as you're very easy. Ron, I had somebody ask the same question back in 1982. They said, well, most of your systems are long. We've been in a bull market. Then we went into 87. We went into 2001, 2002. These systems, what I just told you, is based on my systems going all the way back to 1962 when I first started working on systems. It has always been. I know there's an upside perpetual drift to stock prices, but there's really no upside perpetual drift to future prices at all. There hasn't been, has there? Yet still, as a general observation, I'm going to tell you, Ron, that the buys are easier to find and they work better than the shorts. So again, that's my pragmatic approach to it. So we can have a bear market. Well, in fact, look, recently we've had a big sell-off in stocks here, haven't we? We haven't had any buy signals no way down. We had one buy signal up at the top, took a little nice profit in it. Now we're in the sidelines. So all I can tell you, if you're developing systems, it's a heck of an insight that I just told you that the buys do work better. What's the start of your date of your back test? Mary, my data for testing goes back to 2002. Why 2002? Because that's when we started trading the electronic contracts became really, really active. And so I've looked at the data going back prior to that, but as I explain the systems to you, you'll see that there's some things that could not have worked back in, say, 1995 that would work in 2002. So I'll try to get that in a moment. So here's the gold system, net profit $57,000. The total number of trades, 376 trades. Winning trades, 329. The system's been pretty accurate on the long side. I think we've got another sheet here. This is the gold system's been a little bit more erratic. Oh, it dropped, and then it started to come back. So it has had a little more erratic action to it, but the average profit per trade has been quite a bit higher. Question, these stats are on one single contract, yes. Have you used TradeStation Optimizer to assist in your parameter inputs? Yeah, I actually have done redundancy with a lot of ways. Now, also keep in mind the way I develop systems is I'm not new to this. I've been doing this since 1962. So a lot of these things, like some of the patterns I trade off of, actually I don't need to do any optimization. I know the pattern. I've traded these things for 50 years. So these are little tricks of my trade, I guess, that I've added in there. Now the gold system started to come up and has turned on here quite well. What is the time span again? The time span is going from 2002 forward because of electronic market. So here's a gold system, a little bit more data on it. The average time in trade is 3 days, 22 hours. 22 hours, I mean, maybe you can see the time span that we have in there. So 376 trades, 329 winners, 47 losers. And here's the bond system. The bond system, there's a big decline in the bond market, and it went short at the top. It had some buy signals in here. It had one that was a loser over here, and then started getting short-term buy signals in and out. See, most of the time, these markets are pretty choppy, aren't they? So whether they're in an uptrend or a downtrend, even though this is an uptrend, we chopped the near, and there's opportunities for these little pop rallies in the market. Is there a money management feature in your system which increase the size? You could do money management on the systems, but the results that I'm showing do not include any money management at all. And yes, we are using 24-hour charts. As soon as the market closes, we have the potential for signal tomorrow. If that answers your question or not. So here's the bond system. Let's see, number of trades, 518, 81% of the trades have been winners. Average profit per trade has been $330. It's been a pretty good trade, so there's only a single position size. Yes, that's correct. Again, Stefan, that all of the results I'm showing are based on one contract. There is no money management with this at all. You could add money management to it. That's up to you. That depends on your own risk tolerance. I have some comments about that. Do we use slippage and commissions? Yes, we slightly alter the numbers for commission. Now, commission's $5, thanks to TradeStation. God bless them. When I started trading, commissions were anywhere from $45 to $75. So I'm used to a whole different commission schedule than you guys are, and we have compensated for that. What about day trading? No, my system won't work on day trading. Don't day trade. I think day trading, the dream of becoming a day trader turns into a nightmare. It's not low-hanging fruit. It's a dream people have. Oh, I can just make money and get out at the end of the day. The problem with that, you'll never, ever catch a big move. Never, ever, ever catch a big move because at the end of the day, you're out. So how are you going to catch a $4,000 or $5,000 move per one contract? You can't. So the math is stacked against you. You can catch a big loss. You're not going to catch big profits. So maybe it's just I'm an old man. I'm 71 years old. Do you think I really want to day trade? Hello, I don't think so. Would rather have something that's a little more conducive to an enjoyable lifestyle. Well, the bond system's not near perfect. None of these systems really are near perfect. The results were better, but look what happened last year. We started going in equity dip. Now we've come back and broken out above this high. These are actually made these charts about a month ago for this presentation. It's just consistent. These systems, probably anybody's system, truthfully, just grind it out. Ray, what do you think of stock and gold market now? Well, that's away from the system, but my view of the stock market is expressed in my forecast we did at mid-year that called for a significant top in July, and I don't think there's any reason to back off from that. Gold, we talked about it even at the first of the year. We start to rally in August, and we'll continue rallying. You can see those forecast reports in the last thing that I did for TradeStation last week. I think I did it. You can see all the forecasts. So I guess we've got some more stuff on the bond system, so you can see that, yeah, there's more numbers on them, I guess. Here's the crude oil. It's a little harder to see it. We went to the black screen. I don't like the black background. Most TradeStation and Bloomberg people have black background. I like the white background, but we threw one in for you in the white background. You can see where's a buy signal we got out here. We bought, as I mentioned yesterday, we bought crude oil and got out. So we hadn't had a trade for quite some time. When you buy, do you have any preference to buy when the market opens or when it's about to close? Richard, the way my systems work, let's talk about that for a little bit. I have found that at times, most of the time, I'm just buying on the opening or a specific predetermined breakout point. If I know from my work that if prices get to this level, we should really start to explode. Like yesterday, we didn't buy crude oil on the opening. We bought it. It got to a point we went long at that point. It had enough volatility expanding to the upside that we went long. So I'm usually buying in the opening or a predetermined price. If it gets to that price, I want to buy long. Are the systems free for TradeStation customers? Piero, you got to be kidding. You think I'm going to give this for free? Absolutely not. You got to pay for it. This is my life's work. So we charge for it. I don't forget the exact numbers, 45, $50 a month, maybe $100 a month for some of the systems. Yeah, I don't care for the black background either. So we'll go to a white background. I think it's easier to use a black background. So here's the results of the crude oil system. Interesting story about the crude oil system. I developed the crude oil system maybe 4 or 5 years ago, way back in over here someplace. And look at the performance, it's really good. And I watched it, watched it. Maybe I'll start to trade this, but it's crude oil, it's a wild market. And I had to finally say, you know what? I watched this puppy long enough. I wanted to grow up from a puppy to a full-fledged dog. I am going to start trading this thing. So I started trading it. I've had my first 2 trades now in the system. But with that long, waiting and saying, this just looks too good. I just can't believe this. This is so finally, Larry, you got to do something here. You got to fish or cut bait. I decided it was time to fish. And so that's the etymology of the crude oil. Crude is a difficult market to trade, Pierre. You're absolutely correct about that. Do I make more money trading or selling systems? More money trading. We only have about 15 people, not even that, following our system. So do the math. So far, at least, there's not been very much money in selling systems. On TradeStation, there's been a lot more money trading the systems. And what do you think about Apos Bull charting? I don't know what Apos Bull charting system is. I know what an Apos Bull is, but I don't know anything about the systems. A lot of this newer stuff that's out there, I'm not well versed in. Like I said, I'm kind of live in my little cave and do my little thing, and I'm topically aware of most stuff, but I just follow my stuff. Can you do a webinar for us trading system to make sure the things are correct? Well, for people that trade my systems, we do have explanations, so you know exactly what the settings are, how to do it, and all that stuff. Because sure, we hold your hands and all that for anybody that's going to pay us money to follow the trading system along with me. Bet we do that. So here's a crude oil system. Number of trades, 381 trades, accuracy 73%, average profit $444. So you can get a sense of what that looks like. What is the basis of this system? This is what I want to talk about. So let's talk about that now. After the PFG liquidation, which company over here, I trade with TradeStation. Is the system available only in TradeStation? Absolutely only available in TradeStation. You guys and gals don't have any clue how much work it takes to develop a system and to program a system. I have a full-time programmer. It's not cheap at all. He does a great job. He's worth every penny we pay him. He's a wonderful guy and a great programmer. But there is a lot of expense to maintain in this stuff. And to do it just for TradeStation, that's learning all new languages. Only available in TradeStation. That's correct. So let's talk about the basis of the system. There is a common thread that runs through all of these. Yeah. Do you feel you can get a feel for the market by watching it closely? Yeah, a little bit. Not enough that it's going to make you a profitable trader. If so, then everybody that's watched the market for the last 20, 30 years will be a profitable trader. They're not. There's the answer to your question. So what are these systems based on? They're based on just 2 things. So here's the secret to the systems. Okay. First of all, these little patterns I've noticed throughout the years. I've written about them. Some are in my book, some are not in my books. Oops would be a familiar one to probably some of you. So I've noticed these little patterns, and when they develop, maybe they're based on an inside day or an outside day or 3 consecutive down closes, an uptrend or whatever. There are these little patterns that repeat in all markets. I think the patterns that you're looking at on your charts are really show us the emotions of investors. So when the investors get very emotionally bearish and we're in an uptrend, I'm going to be looking for a buy signal. And there are some patterns that reflect this. So part of the systems all have rules. One rule would be a pattern. Maybe we have 12 up closes and a down close, we're going to be a buyer. That's not one we use, but as an example. So there are specific patterns. That's one thing that we use for the systems. And we use those same patterns for gold, crude oil, S&Ps, and bonds. Those same patterns are universal. So that's one thing. The other thing that we do is we look at monthly influences. Question. These systems are all oriented based only on price. No condition. There's no condition like COT or SEN. We're only looking at price. That's it. I am working on a day trading one that buys on the opening, gets out on the close, but to do intraday stuff, I think you're going to drive yourself crazy. Yeah, it's all price-based. All of these systems have things in common. They use some specific patterns I've developed over the few years I've been trading, and also monthly influences. And I think these are huge. As I mentioned, Art Merrill first wrote about them, and they are still there. One of the things I uncovered is that I think the reason that stocks rally at the end of the month is particularly true if bonds have been rallying at the end of the month. In other words, if we're having lower interest rates towards month end, then stocks tend to rally more at month end. So I look at things like that. Now, if you just think about it, if stocks rally at the end of the month, they probably start to decline usually before the end of the month. So there are time periods within the month that stocks are most apt to decline. And I found that to be true virtually of all markets. Gold, as an example, has a great tendency to rally on Fridays. Just go back and look at your charts on Friday and go say, my gosh, I never saw that before. That gold tends to have explosive rallies on Fridays. So that's a question here. The time periods, again, are from 2002 forward, and they're on daily charts. I'm not using any indicators, Bill. That's unique to this. I can't say, well, we're using a 15-day moving average. We're not. We're using the seasonal monthly influences and these specific trading patterns. So am I using percent R? Maybe a little bit, but not much. But if there's any indicator, it's my percent R. But moving averages, exponential, none of that's involved in this at all. I think why this works is because there is definitely a time during the month when crude oil is most apt to rally or decline. Certainly there's a time during the month when bonds are most apt to rally and decline. So I'm trying to take advantage of those inherent influences in those markets. Now, they're not always there every month. That's why we have losing trades. That's why we have protective stops. But is there a bias for bonds to rally at the end of the month? Oh, holy Toledo, you better believe it, there is. So that's what I'm trying to take advantage of with these systems is my work. Now, this is, one reason why I said earlier, well, the idea worked in 1990, but it's different now because the trading day of the month idea, which I've lectured at repeatedly ad nauseum here at TradeStation. If I'm going to buy on trading day 23 of the month, well, that's different than it was prior to the electronic sessions because trading day 23 would buy on the last trading day of the month if there were 22 trading days in a month. But now it's going to buy in the afternoon session instead of buying on the next day's opening when we had pit session markets. So all that, I did this stuff using pit session markets and found out those influences. But then once we shortened up the days because of electronic session, all that had to be thrown out the window. We had to change all this. Same idea, right? But we have to adapt to the electronic market. So there's a huge adaptation to these electronic markets. When did you start this crude system? We actually developed the crude system maybe 4 or 5 years ago, maybe longer than that. But I actually started trading it 2 trades ago, a month ago, something like that. Would it be better to let Larry make his presentation covered? No, the questions are actually probably pretty good. It settles some of you down, gives you a good idea. And I may miss points, so I don't mind the questions at all. So again, the strategy, there's no optimized parameters of this period moving average or this volatility breakout. I'm using percent R occasionally. I'm using the price patterns, my fake out pattern, stuff like that. And then I am using what I think is a valid approach, the seasonal monthly patterns of the markets. Clearly, stocks start to decline right after the first of the month, most always, but not always. We try to adapt for that. I have another concept that's been very effective, and that's while there are, you have to look at months. I'll give you a little insight into months in the marketplace. You have 31 days of the month. So you might test, well, what if today is June 15th? We want to buy tomorrow. The problem is June 15th could be a Saturday or Sunday. So what day are you really buying here? So you can then look at trading days of the month. A month can have up to 23 trading days. And you kind of homogenize, say, all Junes by trading day 15. If you're going to buy on trading day 15, you're going to get most of the time at about the same time. But if you have holidays, say in July or August, September, December, November, that may fluctuate. And also, you don't always have 23. You might have 22 or 21 trading days in a month. So I have another concept. I want to buy with X number of days left in the month. That homogenizes it and pasteurizes the data at the same time. So now I'm not just looking at, I'm in the 6th trading day of the month, but how many days from the end of the month am I looking for a buy or a sell signal? And I think that's I know that's an even more stable approach to developing systems. So a lot of work, a lot of thinking goes into this stuff. It's not, a lot of percolation and just thinking about it. Yesterday when I was fishing, and I was thinking about, well, you know what? There's a weakness in the system. How can I overcome that weakness? And it's just a lot of thinking about this stuff as opposed to just running a bunch of numbers. Well, I see some questions come in. So let's see. Do I hold overnight? Yes, I love to hold overnight because that's where the money's made. And the gaps and the movement over a couple of days. Like I said, we are working on a day trading system that buys on the open and gets out in the close. That's the only intervals that it has. And it does okay. We're still working on it. But the big money, I think, comes from holding on and trying to catch a trend move of a couple, 2-3 days. That's where the big profits come from. Is a trade day of the month indicator available in TradeStation? We are making in my packets trade day of the month indicator available in TradeStation. We'll make that available. What's the minimum capital required? There's a great question. How much money do you need to have to trade these systems? I think $10,000 per contract. But yeah, I'm an old man, crotchety old conservative old man here. So I want to make certain I have a lot of capital I'm sitting on. $15,000 would be even better. Now, a lot of people don't have that. You can trade it with less, but you will suffer the consequences if we do have a drawdown. So that's something I don't have any control over, how you choose to margin the market. Some people might want to overtrade it. I don't know. But I like to have plenty of equity in the account per trade. I have a lot more cash in my account for my trades than most people do. But again, I'm a crotchety conservative old guy. Let's see. You hold over? Absolutely, I hold over weekends. I've got some great moves that have happened over the weekend. Yes, I love to hold because the basis of all profits is trend. All profits you'll ever make in the market is the basis of trend. So what causes trend? Time. Time is our ally. It's not our enemy. You people have been so goosed up about get in, get out. You've forgotten the basic math of this. We need trend, and trend is a function of time. What will today's slides be available? That's TradeStation, but they'll be available. They'll put them up. They always do. How do you get TDM data? That's your own research. That's how you do it. That's hard work. Do you hold on weekends? Yes. Are you looking to also implement systems in NinjaTrader? Well, I'm a TradeStation guy. So these are available in TradeStation. Are you going to show a specific trade setups and strategy? Well, I've talked about some pretty specific ones here, but am I going to give away all the secrets? No, I told you the basic idea of how I do it, but am I going to give you my hard work for the last 51 years and say, here it is, you can have it for free? No, I'm not going to do that. What about trading and using CFD? I don't trade CFDs. You're limited there because they only let you stay in the positions for so much, and then they're going to bail you out, so you can't catch a big trend move. I just trade these markets. I've traded all this time period. So Forex and all that stuff has never appealed to me because I've made a lot of money. I'm the only guy who can tell you in these webinars, I've made millions of dollars trading, not once, not twice, but numerous times trading these things. So this is kind of what I cut my teeth on. And I'm not going to teach this old dog any new tricks here. Someone said the trend is your friend. Yeah, until it ends. So there's a lot of these popular sayings in the marketplace. The trend is really important. As an example, I'm much more inclined to be a buyer at the end of a trading month. Well, I told you that's an advantage. It's a great one if I'm in an uptrend than if I'm in a downtrend. So see how this stuff ties together? As a small trader, should I put on one trade at a time? However, this here's the problem with my system. They don't trade every day. They probably trade once a week. So most people want to trade more than that, and I don't. Every time I put on a trade, I'm exposed to risk. I don't mind the fact that the system only makes maybe $10,000, $15,000 a year. I don't know what the yearly figure is for crude oil. It's probably $20,000 a year. You can look in the PowerPoints or the on our website, ireallytrade.com. You can go look at more data on the systems. But I don't want to be trading every day. And if I have a small account, I don't want to have a trade every day. But that's just my trading style. I may not be for you. I just want to be able to consistently make money. And I think that means sitting on a lot of money, not over trading my positions in the marketplace, and having something that has held up on a relatively consistent basis over the years. Can you sleep at night? Of course I can sleep at night holding overnight. Yeah, that's the way I live. Of course. Well, you have a stop in the marketplace. Why couldn't you sleep overnight? If you start day trading, you're going to be drinking so much coffee during the day, you won't be able to sleep overnight. I don't have a problem. Yeah, no problem sleeping overnight. If you purchase the system, when do you get the signals? Well, you rent the systems on a monthly basis, and then the systems will appear in your computer. There's a little strategy performance. You click on it. It'll tell you exactly where you're going to be a buyer or a seller the next day, or if you have it automatically traded, it'll it'll buy in your account. Boom, you're long. And then it will place your stop and all that kind of stuff. But that's really more of a trade station question, but they can explain how you do that. But yes, it will show you what the buys and sells are for tomorrow. High frequency trading system versus yours. Well, high frequency trading system takes a huge amount of money, and you're going to be in for a millisecond. And I don't know how to do it, first of all. And the high frequency trader systems, on average, in the funds have lost money now for 2 years in a row. So it doesn't look any better than a lot of stuff. And their idea is to have a big bet and hopefully you won't be wrong and get out with a very small profit. I would rather have a small bet and a large profit. Do you advise clients what action to take? Nope, I don't advise clients. We have these systems. They produce signals. I take the signals. I take every one of them just as you can. But I'm not a registered investment advisor. I'm a trader, and I offer these systems for you, and that's really it. A trade clearly suggests when to buy and sell. Yes, you'll have. Well, you saw the charts there, right? We can go back to the any of these charts. Those arrows come up and down on your charts. It says we're buying tomorrow, we're selling tomorrow. Those arrows are there. They will go on your chart. It'll either automatically do the trade for you, or it will say we're buying long. Arrows, yeah, it's going to absolutely show you what we want to do in the next market session. There's a recent crude oil signal, so you can see this goes back to February 2013 of this year. So it's had 1, 2, 3, 4, 5 losing trades, and out of, I don't know, 30 maybe. What's the basic idea of your targets? The basic idea of my target, that's a good question, is a time basis and a profit basis. Again, because I want an efficient system, I don't want to hold the trade too long. I want to be out in a certain number of days, so I'm more time driven. What's max drawdown? It varies from system to system, but max drawdown is probably around anywhere from $7,000 to $10,000. Go back and look at the numbers, or again, they're on our website, ireallytrade.com, and we have a lot more data there you can look at. Have you considered offering the systems through a service like Collective? I don't even know what Collective 2 is. I'm a trade station guy. It's easier to run systems on pit markets, yes, but you can't get filled. They're not really tradable anymore. Is the growing dominance of high frequency trading forcing you to adapt? No, I'm trading the same way I've been trading. Do you scale up the number of contracts at a certain point? I don't know. I think that's dangerous. So I don't. I have X number of contracts per dollar in the account. I found that's the best. Yes, our website is ireallytrade.com. There's more information on the systems there. If your signal occurs the previous day for the trade to be executed, can something overnight cancel the next day's trade? Well, that's a good question. Let's say we have a signal to buy tomorrow, but it's buying at a price, so we must get there. So the trade will be canceled at the end of the day if we don't get there. If we're buying on the opening, well, clearly we're going to be filled in the opening, aren't we? But there's nothing, I don't look at the news, there's nothing that's going to say, oh, don't take the trade now. You know, this is kind of like diving in the deep end of the pool, guys. You say, I'm going to be with the system. I'm going to give it a shot, or I'm not. When it isn't my system, it's anybody's system. You got to say, hey, I'm with you or I'm against you. I'm going to ride for the brand or I'm not going to ride for the brand. You have to take a leap of faith here. And that's why it's a leap of faith for me. I don't know if these are going to hold up, but I'm trading with real money because I think they will. That's my leap of faith. And any system, it's the same way. It's a leap of faith. That's why you have to have a money managed correctly and don't get too aggressive in the money management. Is the system good even for long trades? No, the system is, by definition, the average length of trade is going to be 3 or 4 days. So this is not a long-term system. That would be another system approach. So my stuff clearly wouldn't be for you. Why do you trade at the open instead of at the close? Because I found it more effective to be a buyer on the opening than to be a buyer on the close would be my answer to that. I've tested both ways, and this seems to be the best for my approach. Doesn't mean it's the best, but it means for my approach it's pretty good. Which open do you use for bailout? I'm going to use the first opening I can get out. If I can get out of a trade with a profit, hot damn, I am so happy. So as soon as I can get out, depending on the pattern, a bunch of other stuff. But yeah, if I get a profitable opening and it's profitable by a certain amount, whatever the rules are, I'm going to get out. Besides, it doesn't make that much difference. It's like people say, why only use a 37-day moving average? Big deal. You think there's a difference between that and a 42-day moving average? There's no magical math to this stuff. It's largely luck of the draw, and generally, do these things work? There's no one moving average or exponential or one this or that. That's the secret to this stuff. It's hard work. We're going to work off the averages in general of how things respond in the market. Do the 24-hour electronic trading affect your execution? Not the execution, no, they don't, but they do affect how we count days and months and all that other stuff and holidays we talk about. Do you use only automatic systems? So that's interesting. I trade discretionary and I have the automatic trading system. I'm in Montana right now. We're on vacation. I haven't done much trading at all the last 20 days, but I've had all the mechanical trading systems running. They're great. I can go out and fish and raft and do whatever I want to do and let those things run and do their thing while I'm doing my thing. So it really depends on your personality, your lifestyle, what you want to do next couple of months. That's the way I work this. So I do discretionary trading, yes. In your website, where's information on the system? I can't tell you right where, but if you click through, you should see TradeStation on there someplace, or trading strategies or systems or something. What is the name of your favorites? Of the 4 that are available, my favorite really is probably crude, then gold, then toss up between bonds and S&Ps. So that's my way I would say that. Probably S&Ps for the starter because it's an E-mini contract and the margin's a little lower. Are you still using a percent-R indicator? Oh yeah, I'm still using a percent-R indicator. Yep, sure am. Is it possible to place an order at night but only want it to affect during the day? Because I hate those nighttime moves. Well, Clark, I differ than you here. I like the nighttime moves. I've had some great profits in the nighttime moves, some losses too. But by and large, because I think I'm in phase with how the markets trade, those nighttime moves have been good for me. So I like the nighttime moves. So my orders may be effective in the nighttime market. And based on the testing and my trading style, that's not been a detrimental thing. So I hope that answers your question, Fred Clark. Well, we've probably run way over time here. I hope that I've shown you that you can trade mechanically. I didn't say you can make a profit. You can't say that. But it is possible to have a mechanical trading system. I have 4 of them that automatically buy and sell. I take these trades myself, real time, real money. That's because I believe in them. I've taken that leap of faith. And I've done this stuff for so many years. If you want to join me with that, you're more than welcome to. If not, I hope you've learned a little bit about trading strategies and systems, the pitfalls, the good and the bad of this stuff, because there is good and bad to it. And if you're going to trade my systems or anybody's systems, you better pre-prepared. It's going to go up, it's going to go down. And if you're not pre-framed for that, when you get into the good times, you'll overbet. When you get into the bad times, you'll cancel it, or you'll underbet. So I hope you have some perspective about systems. That's the most important thing I think I can share with you today. Yes, trading can be practiced. I think paper trading is a great thing to do. I think that there's nothing wrong with paper trading at all. It's a wonderful exercise. Everybody else paper trades. My son in medical school was operating on a cadaver. That's paper trading. Lawyers have moot courts. That's paper trading. My favorite country western singer, Chris Ledoux, won the PRCA bareback championship riding on one of those John Travolta bucking machines. His arm was broken. And he didn't go to many rodeos. 1 year, he just rode his bucking machine. He paper traded. Then he went down and won the world championship. So yeah, you can paper trade. And I'll let Michael explain that question to you. Well, I'd like to thank everybody for being here. It's just such an honor that people would listen to me and come. And so it's very comforting for a crotchety old man to have people to listen to him. So I want to thank everybody very much for being here today. And hope you learned a little bit. And as always, good luck and good trading to everyone. And thanks, TradeStation, for having me. Without TradeStation, I wouldn't be here. You wouldn't be here. So we all owe them a heck of a debt of gratitude.
Thank you, Larry. Great as always. Thanks everybody for attending. Lots of great events on TradeStation. So, visit the website, visit the event center, and we'll see you at an upcoming event wherever you are. Thank you very much for attending, and good night. We'll see you again.